Welcome back to Power Breakfast on CNBC TV 18. Now, we covered all the global market action that happened overnight. How is all this going to be impacting our Indian markets? We have a team of research joining in with us to set you up for trade, important stocks to watch out for, as well as cues at the world of F&O. Firstly, Sudarshan, good morning. And what are we watching out for in terms of important cues today? As of now, a start that we're expecting for Indian markets seems quite muted.
That's true. So in the absence of global cues, all the focus is on domestic cues. And the last three sessions, if you take a look, what we have seen is the reversal of gains that we saw on Monday. In the last three sessions, Nifty is back to the levels, almost near to the levels what it was on last Friday. But major pain has been seen in the broader markets. While yesterday also Sensex and Nifty, after narrow range of trade, closed with minor cuts. But if you look at the broader markets, all the major indices were down somewhere around 2 to 3%. That was reflecting in market breadth also in the favor of declines. The ratio of advanced decline was almost 1:5. And for this week, if you take a look, Sensex and Nifty up 0.3%. But look at the broader markets. Mid-cap index is down 2%. Small-cap 100 is down 2%. Micro-cap 250 is down almost 3%. So going forward, we'll have to see more than benchmark how these broader indices react. Now, this was the muted range bound of trade that we saw in Sensex and Nifty was reflecting in the flows also. Yesterday in the cash market, we saw FIs buying more than rupees 930 crore. DIs also bought more than rupees 600 crore. But apart from equities, take a look at commodities market. There, Brent and NYMEX both are hotting up. Yesterday also we saw Brent almost hitting the level of 79. That is the highest that we have seen since January of 2025. But coming back to stocks that might be in the focus in today's trade, keep an eye on all these NBFCs, PSU banks, because RBI has released project financing norms, and those norms indicate that from draft, current norms look easier. Page Industries, another negative brokerage note in second day. Nestle to consider bonus issue, and HL board meetings on June 27 to announce the dividend. And lastly, about GIFT Nifty, it's indicating another day of muted start.
Okay. Thank you so much for that, Sudarshan. But let's go over to Ria to tell us which are the other important stocks to watch out for in today's trading session. Good morning, Ria.
Good morning, Vinny. Let's take a look at the stocks to watch out for in today's trading session. First up, for Sai Life Sciences, sources tell us that TPG Asia is likely to sell a 6% stake of the company via block deals. Deal size likely to be at $102 million. For Biocon, they have closed their QIP issue price at rupees 330 per share, which is a 3% discount to the floor price of rupees 340.2. For Keynes Technology, they've launched their QIP worth about rupees 1,600 crores. Setting the floor price at 5,625 per share. Moving on to Canfin Homes, this one will be in focus today. They're going to consider fundraising by way of issuance of equity shares on the 25th of June. Nestle's board will also consider bonus shares on the 26th of June. Natco Pharma to be in focus. US FDA has issued Form 483 with 7 observations for the company's Hyderabad-based plant for the pharma division. Some order wins in focus today. ITT Cementation has bagged 2 new projects worth rupees 960 crores. Brigade Enterprises, Brigade's Buzzworks, has signed a 24,000 square feet deal with Infor India in Hyderabad. Axis Gates Tech also to be in focus today. They've signed a strategic partnership with Europe's Aldoria to strengthen their India space capabilities. And lastly, Sun TV will also be in focus. Reports say that Dayanidhi Maran has sent a legal notice to Sun TV's CMD called Kalanidhi Maran, saying that the brother has seized control of the group fraudulently.
Okay, Ria, thank you so much for that. But the final update coming in from Mangalam on what's going to be happening in the world of F&O. Good morning, Mangalam.
Good morning. So if you looked at the Nifty yesterday, 24,800 at the time when all the broader markets and global markets were under pressure, it would appear that it was expiry related and someone had just put a magnet at the 24,800 mark for the Nifty itself. It was meandering just about 20 points on either side of that level, and that's what option writers were expecting as well. Mid-cap index was lower, small-cap index was lower. The advanced decline told you that portfolios were deep in the red and were bleeding yesterday. And now the GIFT Nifty indicates that, there is a muted start today as well. So how much of yesterday's outperformance on the Nifty was expiry-related is something that will play out today. No problems with the cash market flows. Yes, the FIs bought 935 625 crores. The DIs bought 605 crores. The important part is gross volumes by the FIs was lower, largely because it was a US holiday yesterday. So that part of the market was absent. In index futures, they bought about 426 crores. And they've inched their longs higher from 20% to about 22%. So 78% of the FI exposure is still on the short side. What is important for next week? It is the June series monthly expiry. And ahead of that, the option writers have taken positions at the 24,900 call for a premium of 140 rupees and the 24,800 put for a premium of roughly 200 rupees. What does that imply? Plug these numbers at the strike price, and option writers aren't expecting the Nifty to break this range of 24,600 to 25,50, which it has been playing around in the last few weeks itself. The important trigger on the upside will be if the Nifty and the Nifty Bank sustainably cross the 20-day moving average and close above that. The Nifty Bank has been doing that on alternate days. The Nifty not below, has been closing below the 20-day moving average for the last 4 or 5 trading sessions. Birlasoft and Chambal Fertilizers are 2 stocks I'll be watching out for. They've exited F&O ban.
Okay, Mangalam, thank you so much for that.